Hi, I'm Victor. I'm an active value investor, and I like sharing my journey as I invest in quality companies that I want to own for a long time, see them go up in value, get some dividends and some income from those investments. Today's company that I'll be covering is ADEA. This company formerly was called Xperi, and they provide intellectual property and software to a lot of the streaming companies that we know and really enjoy. I'd like to go over their financials since they had their earnings today, February 22nd, and I've updated my analysis of a day. I like to scorecard all my investments and go through 4 questions that lead me to make a decision whether I should buy more shares, just hold my shares, or sell my shares. First question, do I want to be a part of this industry? Is the company operated and performing well? Is debt less than 3 times EBITDA? And I want a discount on the stock. Based on the answers to those questions, I decide whether I should buy, hold, or sell this stock. Today's customers are either cable companies that you know, like Comcast, Charter, that are using ADEA's technology to provide the video that you're watching, or streamers like YouTube TV and Paramount Plus, Peacock, and also semiconductor companies that are putting their intellectual property in chips so that your device can stream and so forth. So their customers are very well known. ADEA provides the intellectual property to make all that streaming and video happen. The company reported earnings today, and there was some good things to note. Their revenue increased by 15% in the fourth quarter, so they really had a really good end of year. For the full year, they grew their revenue by 12%. So they had a really good 2022. They were profitable, and they also generated really good free cash flow. So great job, ADEA team. They also, from a capital allocation standpoint, they distributed $5.3 million in the form of cash dividends. They pay a dividend that's almost 2%. So it's nice they do that. They already approved a dividend for 2023 that'll be distributed later on in March 29th. The company also is bringing down outstanding long-term debt, which is important. They're bringing it down $10 million in 2022, and they should continue to do so. That way, higher interest payments due to rising interest rates will not hold them back. Now, the customer did provide guidance, and they're guiding that they're going to be between $385 million and $415 million in revenue. That is less than this year. So they'd be, at best case, they'd be flat to maybe minus 5% in revenue, or the revenue can go down as much as 12%. Taking a look at their income statement, again, they grew by 12% top line. Excellent work. It's great to see them grow. Their profit from continuing operations, $153 million, which was excellent. So they had really good profit before taxes. They had this big loss from discontinued operations. I believe they sold off parts of their business and actually broke apart from Xperi. So that is a paper loss that shouldn't affect them. In fact, in Q4, it was 0. So that paper loss, that really doesn't worry me too much. It was part of the divestiture of the parts that are no longer part of ADEA that were once included when they were Xperi. Taking a look at the statement of cash flows, they generated cash from operations of $183 million. They had some purchases of property and equipment of $12 million. So it left them with a really nice free cash flow run rate of $171 million. I value companies based on the free cash flows that I expect the company is going to produce and discount those free cash flows to today's dollars. In the case of ADEA, they generated over $170 million of free cash flow in 2022. So I'm going to use that as a starting point. Since they did guide that their revenue would be going down in 2023, I'm going to go conservative and just take down the revenue in years 2, 3, and 4. So really marking down their free cash flows that I expect. Long term, I expect 2% growth rate after those years. They do have a really good free cash flow yield of 16%. So great job there. I'm looking at a 9% weighted average cost of capital. I think it's reasonable. This business has been around for a long time, established. They have a good balance sheet. So I'm going to go with 9% as a discount rate. Based on that criteria, I get a value of $1.899 billion of value, but their current market cap is only $1.09 billion. So it really leaves a nice room for a 72% discount that I can have on the stock. Their balance sheet is less than 3 times EBITDA. Performance-wise, ADEA performed really well in 2022 with solid revenue growth of 12%. They also generated great free cash flow, 16% if you compare their free cash flow to their market cap. They have a good balance sheet and pay almost a 2% dividend. 2023 guidance, it is concerning that their revenue is supposed to drop -5% to -12%. They will remain profitable and generate free cash flow, and this will be a steady stock in 2023. This is an intellectual leader, and they pretty much license their intellectual property. And I like companies like that because they tend to be profitable and generate really good free cash. This stock has upside potential, especially since streaming is growing so rapidly. I could see them taking off and growing along with the streaming growth. Let me revisit my scorecard. Is it an industry that I want to be a part of? Absolutely. I like intellectual property companies, software companies. This company is very well operated. They really know this business space. Their balance sheet looks good. Debt is less than 3 times EBITDA. And I can get a discount on the stock. Therefore, I'm buying more shares of ADEA. Thank you for watching the video. Hope you found it interesting. Keep in mind, I'm sharing my journey as an individual investor. I'm not a financial advisor, and I'm not recommending you buy any particular stock, bond, or security. In this case here, I'm an owner of ADEA and just wanted to share my experience with this company. Good luck investing in 2023.